Hi, I'm Mel Lopez, Chief Economist for ASEAN.
And I'm Peter Lundgren, founding CEO at Lundgren's Capital.
Welcome to Sound Economies with Mel and Peter, an East Meets West podcast by Lundgren's Investor Insights. Here we share what we're focusing at in economies and financial markets from the developed and the developing world. Hi, Peter. How are you today?
Yeah, I'm fine. How are you, Mel? How's life in Manila?
It's been exciting. We are working on several pieces for our economic spotlight and upcoming magazines. And of course, it's been a very exciting last few days monitoring how markets are performing. We all know why, Peter.
Yeah, no secrets. The markets and Trump is keeping us busy. Historical times, many ways. As of course, we have explored steep rises and steep drops earlier in the career, but every time is a new situation, and it is we can learn a lot, and historical it is. So yeah.
This episode will be making sense of and explaining our views on the Liberation Day tariffs that to be imposed by the United States beginning Wednesday. And it's very timely to talk about it. We've seen how markets have bled over the past few days. For today, we'll discuss first global brands postponing their sales to the US in light of these tariffs coming into play. And then we'll look to Asia and see how Asian economies are responding. In particular, the trio of China, Japan, and South Korea are leading the way. And then we look to the US and how that country is faring through all of this self inflicted pain, so to speak. So we also have some words from Trump's advisor, Peter Navarro. He was trying to explain why the tariffs came to be and justifying why they are such. So let's jump right into it. Peter, what initially caught my eye immediately after the announcement of the April 2 round of tariffs is this Japanese company Nintendo. They just announced their very new gaming product. It's the Switch 2, and it's very cool. They announced it last week and then immediately said a few days after that pre-orders in the US will not be taking place. It's actually also supposed to start April 9th, which is also the same day when the US tariffs are coming into force. So it's a very uncertain time to do that because if the tariffs come to life, they would have to feed it into the pricing, and they need to do some math on that, for example, and also the logistics of it. So, and not only Nintendo, there are other foreign car makers who have also announced that they're pausing their sales in the US as well. There's Volkswagen, there's Jaguar Land Rover, there's Audi. So it is a very confusing time for global brands who are trying to do business with the US and are finding it very challenging to do so in terms of pricing, in terms of where to send it, how to send it, who pays the
Mhm.
tariffs. Of course, they want to pass it on to the consumer, but that could hurt their sales as well. So the impact is really felt even before the price or the duty is inserted into those price tags, Peter.
Yeah, all the cars you're referring to, they are actually stacked up in the US. They are as they have been shipped to US, and they are now in the free how say it as in the harbors where they're not imported officially as a tax wise into to US or tariff wise into US. So they're simply standing there in endless queues, awaiting the companies as a European car manufacturers are awaiting what will happen if there will be some negotiations, or if they finally need to put them on the market in US, probably with a higher price, as it's difficult for them to absorb the whole tariff increase. So this alone is, of course, not only interesting, but it's also pretty important for the companies, and therefore it's also important for investors. And there will be There will still be price adjustments on individual stocks. Of course, there will be on sectors or individual stocks. Some sectors will also swing back upwards as they might not be hurt or harmed as first initial thought. So yeah, now that alone is one of many complexities that we are dealing with and try to get a clear picture of how to run the portfolios, honestly.
Right.
But there also the big picture, well, the very big picture. That is, things are happening there that the world is on the move, as we always say. It is more on the move than many people, in particular in the Western countries, are aware of. And the last days, it was again historical. What came out
Mhm.
from China, Japan, South Korea. Yeah.
Yes, Peter. So these three East Asian major economies are actually coming together to revive their trilateral trade cooperation agreements, or at least an attempt to form an agreement. These countries have very deep cultural rifts. It's also very historical. They have been trying to negotiate since 2012, but they haven't really seen eye to eye. But now it appears they're able, or they're willing to look past this, deep historical pains to stand up against this tariff war. Together, taking Japan, South Korea, and China, they account for 25%, or a quarter of world GDP. And that's roughly where the US stands as well. So it is exactly trying to match the formidable force of the US in the global scale. The strategy that we're seeing from Asia is really to form more free trade deals with the 75% of the world, excluding the US, if this is really how Trump wants to play it. And the plan is really to send their goods to alternative markets, which is within Asia, where you have a strong, really strong consumer base, especially in Southeast Asia, as well as in Europe, although there is that fear as well that the same frustrations being aired out by Trump and his allies about foreign goods flooding their market and beating local companies could be a very real problem that Europe could come across as well. But really the initial response is really to refocus and find new markets, which is what these three countries are trying to do as fast as possible.
Yeah. So we could see one of several outcomes, but it is increasingly likely that US, let's say it this way, with the actions, what they are doing, is actually at a faster pace, bringing
Mm.
Asian economies together, even closer together than they are today. And we should remember that Asia is the biggest economic region in the world.
Correct.
So if Asia concentrates and consolidates sort of together, then it is just cementing this leading role
Market.
of the world economically. And for those who should have forgotten it, we should always remember that economic power today is political power tomorrow. It has been since so for hundreds and hundreds of political economic history, and it's still the same. Now,
Mhm.
who could team up with Asia? Yeah, it's very easy. Look at the constellations today. I'm very certain that the Middle East, the whole Arab region, Middle East region, will find many cooperation opportunities with Asia. So it
Right.
means that it is not only the strongest economic region in the world, would most likely also sort of find together with the enormous wealth
The Middle
from
East.
the oil region, so to say. Yeah.
Mm-hmm.
So this is one pretty straightforward reaction. What could happen if the world, so to say, ex-US, if the world were really smart, they would try to find together the rest of the world ex-US. they will have a lot of concerns. As the biggest concerns in Europe, for example, is, as you mentioned, uh, where to drop all the goods from China that is not sold in US, yeah, and that is the European fear that it will simply be dumped in Europe
Mhm.
at a cheap price, and that's a risk. But if people sit together and say, okay, there is a situation, we have a emergency, the case is US, and the rest of us we need to try to find a way together.
Mhm.
That could be very wise, and that would isolate US as the problem, but also even faster as the loser in this situation. And
Yes.
then we are already touching a bit base with our sort of base view here. You and I, Mel, we consider the world as being stronger as
Mhm.
such, as a even the U.S. trade war against the rest of the world uh, is nothing pleasant. And U.S. is an important economy. Yes, it is,
Yes.
but it's not the world. And it is U.S. has over the past decades been decoupling as the leader, um, and others are taking over or compensating or whatever happens. It depends a bit on the ambition level and the countries that we speak with. But it is what happening, and the rest of the world, again ex-US, is actually pretty strong and is moving fast. Is moving very fast, much faster than we believe. So um, the upside opportunities are still good, but there is a current crisis. That is for sure.
Yes.
Absolutely. And US is the biggest economy in the world. It means something. It can be painful for individual countries, for individual sectors, for individual companies, no doubt. But on the other side, the best what the world, so to say, could do um, is try to generate more trade free zones, and then instead push up the tariff towards US. That is easier said than done, I know. But anyway, and a big question also, Mel, is this maybe unity between Japan, China, South Korea. Can they sort of rescue the other South Southeast Asian countries? As a, could they sort of say, okay, hey, we help you out? As do we believe?
Actually, Peter, considering that Southeast Asia is really a big economic block, a lot of
Mm,
consumers, and they could absorb a lot of the volumes that the manufacturing hubs, the three of them, are producing and do not send to the US anymore, or reduced volumes sent to the US. But we have to remember as well that they are among the biggest economies as well in the world. Not as large as the US, at least not yet, but
mm,
they do have the might to do so.
mm,
China appears more confident to retaliate as against the US. They also matched the 34% tariff of Trump just last
mm,
week. And that's why markets are kind of bleeding coming into the new week. But they appear to be coming from a better position than they were maybe in the last 2 years. Their domestic driven story is coming back to life. They have consumption boost um,
mm,
internally, which bodes well for domestic consumption and as well as for the rest of the region. So there is it looks promising,
mm.
especially that Southeast Asian economies remain to be growing rapidly, much faster than Europe or the US. And yeah, it could be a way to rescue the region, the whole of the Asian economies, Peter.
Yeah. So this is interesting, and what we also note is that many of the Southeast Asian countries, they have still fiscal maneuver room to
Mm-hmm.
support their own domestic economy. Meaning, also if this should turn out to be a bit crisis-like, there's fiscal maneuver room to say, okay, the countries themselves can actually support.
Right.
Um, the economies and stay with high growth. So, of course, interesting is to look into to the center piece of the whole
I
of,
see.
of the whole issue. Yeah. Yeah, again, if you ask Trump and his supporters and advisors, the U.S. is not the centerpiece. It is actually the rest of the world, and we know how it is. Also,
Yeah,
personally,
they think they're the
if
victims
if the
there.
if we think the rest of the world is stupid, then try to look a bit at yourself instead and take a break. Yeah. So that is it is so interesting to see and try to listen a bit to what is coming out of arguments. Yeah. And
Mm-hmm.
even today, just a few hours before we had this recording, the
Yeah.
very fine newspaper, business newspaper, Financial Times, they actually
Mm-hmm.
bring a piece written by Peter Navarro, is the closest one of the closest advisors on this issue to President Trump. And Peter Navarro has been advisor to Trump also in the when Trump was having his first
Term,
term
yes.
as
Mm-hmm.
president. And reading this pretty long piece is yeah, fun enough to like listening to Trump. Yeah, there's I don't know how many, call it half arguments or whatever we'll call it, for why the world is stupid and treating US so badly
Mm-hmm.
as Trump is saying that the world is. And I don't know if we take this article from or column or piece from Peter Navarro today, there are probably like 50 complaints. And you could say statistically, if you come up with 50 complaints and throw them on the table, one of them might be right, yeah. But let's start somewhere else. There are out of this bunch of complaints and all kind of things. There are two precise examples on where US has brought a complaint to the WTO trade organization, and that
Mm-hmm.
about the Europeans. Europeans, they don't want to have the gene modified crops to import them. And the second issue is also well known. It is that the hormone treated US beef, European countries don't want to import that either. And that was a complaint. But the key is the Europeans don't want to eat it. We simply don't want it in the in Europe. And this is not sort of my personal view. It is just how Europe is thinking and doing.
Right.
So it's a hopeless complaint. It is simply another example on U.S. products that might work fine within U.S. and no harm about that, and that's all good. But U.S. is not the world anymore.
Mm-hmm.
People outside U.S. they dislike this kind of products, and there are truckloads of other products that European consumers or consumers elsewhere in the world they don't want. So and that is hard to be unhappy with the world on that basis. It's very basic, but
A matter of taste, right, Peter?
it is just it is just so basic that I am surprised about how fast the reaction is towards U.S. Products. Um, we know that consumers they can vote with their feet, so to say, as they can say they don't want to
Mm-hmm.
buy the big US consumer brands anymore. They buy a local brand. We have seen it across the world. We
Right.
have seen, in particular, Canadian travelers avoiding US already. Um, European bookings towards US is going down as well.
Mm-hmm.
Already in the very early stages of when tariffs was discussed, US airlines they already cut the number of flights uh,
Mm-hmm.
just as they could see this coming, and that is actually pretty fantastic. Action. What we hear from here and there,
Mm-hmm.
regardless, is that a number of US CEOs of very large companies they say already now, today as we speak, that they feel US is in a recession, and that is a immediate reaction from consumers and clients on US. It is
Right.
so fast that we have never ever seen that before in history. I've never seen it. So this is actually what is provoked. That downturn and the reaction towards U.S. companies
Mm-hmm.
is so imminent and so fast we can't imagine. That will hurt U.S. companies. That will not hurt the rest of the world because some of these purchases are moved. We I can a very concrete example. We are one of our alternative investment funds is looking to invest into a Danish sort of IT company that offers particular solutions. Uh, that is sort of partially you could call payment solutions, but it's not a fintech company. It's a different direction. It
Yes.
doesn't matter. But they are already now, and we are talking about after the first quarter, they expect a much higher turnover this year because some of the potential clients they're fighting for, they use US-based systems, and they are all of them. They are moving away from US systems and taking this local system. It is going so fast, and that is impressive.
Mm-hmm.
Again, we've never seen it. So that is interesting. I actually judge that the tariff threat is doing a lot of harm to the U.S. economy and particularly U.S. corporates already now. But it's a more than isolated U.S. problem. Meaning, when we are talking about stock market, we'll of course revert to that. But it is where the biggest threat is. That is actually on Wall Street.
Mm-hmm.
Now, that is, as mentioned, fantastic, interesting, historical. Worth noticing. There's um, there's one complaint from Peter Navarro that we've taken said he's right.
Mm-hmm.
And that is actually what also Draghi he concluded in his report last year about the internal competitiveness and basically economy in the European Union. Also, what should have been the single market free trade zone EU is now so complicated and filled up with barriers that it is equal to an internal trade tariff of somewhere between 45 and 50%. The same barriers are outside the companies met with, also US companies. And that is, we could say, particularly that issue is fair enough for the Trump government and administration to criticize.
Mm-hmm.
If it should succeed for Trump to get all these internal EU trade barriers removed, then we can say that is fantastic. But who would be the most cheerful? That would be all the mid-sized European companies. They would really move forward, and it would free
Mm-hmm.
up the movement of goods and simply free up everything in Europe. The biggest winner would be the European companies, and what would go up? Yes, European stocks. So that's sort of a bit the story. The key factor and origin for the Trump frustration is homemade. That is homebrewed in US, and that is remarkable that US don't want to speak about the service as the trade balance for service sector. Yeah,
Mm-hmm.
if we include the IT software sales, then the balance looks much more yeah healthier and equal. So the key is what has happened in US for decades now. The tech sector has moved upwards, and the industrial sector has moved outside US. Yeah, that is classical outsourcing. The problem is that the tech sector has made a few people very rich, but it has not broadened out and lifted the whole society. And that is why also infrastructure, healthcare, education is suffering since years, and now US is paying the price. Yeah, and if you look into the government budget in US, the government budget is a deficit of 6 to 7%. Yeah, it is very unhealthy, and it is not sustainable for a country with such a deficit. Trump is taking over, and how do you normally solve a big budget deficit? Yeah, tax increases and budget spending cuts. That's the only thing he doesn't want to do. And then we can circle back to say, okay, the only solution to save the middle class households in US, and we've said it since he was elected, that is to support global growth, do everything to get global growth and global GDP to grow as much as possible. That will also benefit US. He's doing the opposite, and
Yeah.
yeah, so he will stumble on all the internal imbalances, and that is basically US's problem. There can be some external trade deficits that are unfair. That will always be the case, but
Mm-hmm.
the big thing is it's internally. So yeah, Mel, this is the US story, and we'll really try to look in and listen to Peter Navarro and read what he says. There's absolute nothing new that is usable. We can only see that it is fascinating that Trump is talking about that uh, tens of billions of US dollar is rolling in from the tariffs and will go into the to the to the households, and at
Yes.
the same time, trillions, we talk about trillions of dollars went just up in smoke on on Wall Street. So if we take the perspective and say, okay, from a value creation perspective, this was an expensive one, yeah.
Mm-hmm.
Yeah. Well, how do we adjust all this into our sort of pretty strong argumentation for a good word so far in our many podcasts? If we start in Asia, what do we sort of say?
Right, Peter. So as we mentioned earlier, we do see this tariff chaos as largely affecting the US. The US has been playing the victim, right? But it is now the victim because of its own doing. But as far as Asia is concerned, the region is strong, probably stronger than where it was when we look back to a year ago. Domestic consumption is rising. There is some pessimism, of course, as a response to these tariffs, but in terms of drivers of growth, more economies are looking inward for new or for stronger drivers of growth. And that's good. That bodes well for the region's growth. It will continue to lead global growth. China, for example, is really driving private consumption up so that they could keep growing at 5% despite these hefty tariffs. And that really lifts or strengthens the region's position in terms of as a global growth leader, Peter.
Yeah, and that we see intensify actually. Last week we of course, as mentioned, we cut our in our global allocation, we cut the overweight US equity to neutral. And of course, one could ask, why don't we just go cash and why don't we cut more? And so
Mhm.
we, as a frequent listeners, will know that we only very rarely change our long-term positions. What we upgraded was actually the alternative investment into European small companies, non-listed companies, preferably early-stage companies. Now, right now, we are still pretty okay with the allocation. We also still like the credit risk in Asia. We have never favored sort of credit risk in US, and that is what we are looking into as a next is the credit market in US freezing, and that is we have seen the first signs, and that will spread to that could spread to the stock market again. More fundamentally, we trust we will see a discussion one day about
Mhm.
how investable is US. US is the biggest economy in the world. You cannot avoid being there, allocating to this. That would be that would be too how to say it, too extreme. But is the current political leadership trustworthy? We are sort of moving the way where we could see a majority of investors saying no, it's not trustworthy, and that means that we might see or revisit the allocation to US again,
Mhm.
and that will not be for an upgrade. Europe need to formulate more stronger responses to US, but also need to look inwards and say, okay, how do we meet this kind of critics and how to get our own economic zone more flexible. If that
Mhm.
happens, we would actually we would upgrade the allocation to Europe. But this is sort of the things that needs to happen, and there's no signs that this happen. So we are sort of staying where we are. There's no doubt that the clouds we've talked about now and then that was on the horizon,
Mhm.
they moved very much closer and very fast. But we actually see the world as strong still. Tend to say, despite the volatility, we prefer to stay a bit overweighted risk, so to say. That is still the conclusion.
Mhm.
But we are on the ball, that's for sure. And we stay as we can change at any time, of course, depending on whatever happens within the day. Yeah. So it's where we are.
Very exciting times, Peter. So as we go off the podcast, of course, the work continues. Tomorrow will be a very, very eventful day as the tariffs come to life, and
Mhm.
we'll see how countries will respond. We know what China has done so far, and yeah, it'll be an exciting and slightly chaotic weeks ahead for the global markets.
Yeah. Next week the podcast is on holiday, I believe. Yeah.
Right, Peter.
Um, but of
We're
course,
coming for
at
a
the moment,
holiday, but we'll be back the week after that.
yeah.
And
But
a lot of a lot would have happened already, and we have a lot more to discuss in 2 weeks'
yeah,
time, Peter.
yeah. The Lundgren's Capital is open every day, eight
Yes,
morning to eight evening, and that is every day in the year. So we always
correct.
there. The podcast just need a holiday. Good.
Course, Peter. Thank you, Peter, for a very insightful discussion today, and thank you to our listeners for tuning in. We'll be monitoring global developments and we'll share what's interesting in the next episode of Sound Economies, Mel and Peter on the Global Financial Markets, a podcast by Longines Investor Insights. Thanks for tuning in. For expert insights on the go, download the Longines Investor Insights app for free. For investors, we offer very exciting and high quality alternative investment funds, including our top rated Mutual China Fund. To know more, visit longinescapital.com.